So, risk on, risk off. How do you decide whether you should be risk on, risk off? What does it even mean? And what are the type of assets that fit into these categories? Well, your decision on whether you should be risk on, risk off would be dependent on what you think the market conditions are likely to be ahead going forward, and what is the investor sentiment around these various assets. So risk on, risk off. Risk on it refers to assets where they tend to be higher volatility, shorter term. You could make a lot of money, lose a lot of money in a shorter time frame. Risk off tends to be assets that are a little bit more long term. They tend to be more stable, and certainly during an economic uncertainty, people tend to move towards risk off assets. So how do you decide which assets you should be going towards, whether risk on or risk off? Well, that depends on your overall view of the economic factors moving forward. I personally, as you will see from the previous videos, believe that the overall world is moving towards a recessionary time, and so for that reason you would move towards risk off assets. So let's look at some risk on and some risk off assets and what they look like. So one type of risk on asset would be the likes of equities, stocks and shares. You can see big movements in the stock market at various times. If you go into recession, sometimes you can see pullbacks from anything from 10, 20 to 50% or more during an economic crash. So they certainly would be seen as risk on. Of course, a lot of people have made a lot of money through stocks and shares over the years, so it's a more volatile asset class and would certainly be seen as risk on. Other risk on assets would be things like commodities, which would be things like oil, agricultural assets and so on. Other things are high yield bonds, so you have different types of bonds, but high yield bonds, of course, give you back a higher return, but they carry higher risk. With that, you also have currencies coming from emerging markets. If the particular country is doing well, then the currency tends to do well as also. But of course, the opposite is also true. And again, it's a risk on asset. You've got smaller cap stocks, so you can invest in smaller cap stocks. Again, the liquidity within them would be much less, and so it would take a lot less buys or sells to move those dramatically, and certainly would be considered risk on. Of course, you have things like real estate, whether that's retail, commercial, they tend to move significantly as well. And again, if you do hit a recession, they tend to get hit quite hard. There's a lot of talk, as it is in the US as an example, that they're in for some big shocks there in the whole retail and commercial and even industrial space in that. So certainly risk on asset. And of course, many people, and rightly so, would see cryptocurrencies as very much a risk on asset because there is, of course, high volatility. So what would be considered risk off assets? Well, of course, you have things like government bonds, and US government bonds would be seen as one of the safest in the world. There's companies and countries all over the world, and banks, of course, that buy into the likes of bonds and see it as a safe place and a good place to get pretty much a guaranteed return if you trust in the government to be able to pay back the debt, while also, having a safe asset, getting a smaller return than, say, for example, high risk bonds, but still a return all the same. Of course, gold for centuries and forever has been seen as a safe haven asset in uncertain times in the economy, and gold actually, not only does it hold stable, quite often it can go up quite significantly if people are rushing to move away from risk on to risk off assets. Of course, then cash and having money in your bank is certainly seen as a risk off idea. Now, of course, you could say inflation would eat into the value of cash, and that may be right, but let's say, for argument's sake, inflation was 5%. Well, then the value or the buying power of your money will have gone down by 5%. But what if at the same time, for example, stocks and shares have dropped by 30, 40, 50%, well then of course it would have been very wise to have it in cash. The other big thing about having it in cash is if you are keeping an eye on a stock or a share, maybe a property, whatever it might be, and they do drop significantly in value and you have cash in hand to take advantage of that, that puts you in a very good position. And of course, there are actually some people that would see Bitcoin, even though it is a cryptocurrency, many consider it liquid gold. In other words, that it is more, it has more liquidity and easier to get in and out of than gold, but but it behaves quite similar to gold. That's certainly debatable, but it's another one that a lot of people would see as being a risk off. Now, it doesn't mean that the risk off assets can't go down during an economic downturn. It's just that they would seem to go down much, much less than the risk on assets. But certainly some of these assets can actually go up in value during the time of an economic downturn. So the point then is, if you believe that the future holds, at the near-term future, in the next months or maybe year or so, that we may hit economic uncertainty, maybe a downturn, maybe a recession, then should you move into some of these risk-on assets? And if so, which ones? Let's talk about that in the next video.